Tourism was hit hard by the pandemic lockdown, so lifting border restrictions will be a welcome relief. For a closer look at the impact of those lockdowns, here's a checkup on tourism in Canada by the numbers. For some perspective, tourism contributes 1.3% to Canada's total GDP. In jobs, it's more of a heavy hitter, amounting to more than 500,000 of them. Lockdowns hurt businesses in a big way. For tour operators, sales fell in 2020 by 52%, and travel agency revenue declined 46%. There are signs of life. Tourism spending was $15.7 billion in the first 3 months of 2022. That's an increase of 1.3%. Of that, the bulk is domestic tourism. Canadians spent $13.5 billion seeing other parts of the country, a gain of 2.9%. But with restrictions still slowing international visits, non-resident spending was a mere $2.2 billion and was still down 6.9%. But international visits are now picking up, and in July, StatsCan said 2.8 million visitors came from abroad. That's a year-over-year increase of 989%. Well, with restrictions lifted and travel picking up again, an industry scarred by pandemic is starting to recover. Marc Seguin is Vice President of Policy and Government Affairs with the Tourism Industry Association of Canada. Marc, great to have you with us.
Thank you for having me this afternoon.
So confirmation that these border restrictions all go away, including some of those most onerous ones around masking on planes and trains, really being met, we see, with relief from people in the industry. Do you think it will have an impact on what you see in terms of volumes of people now traveling to Canada?
Yes, we do believe it's going to have a positive impact, but we also think it's going to take a bit of time. Because as you know, as everybody read around the world, we had significant issues in Canada. We had delays at airports, delays obtaining passports. That has causes reputational damage, which will take a bit of time to course correct.
So when we think about some of that course correction and getting people to come back here, we also will realize there are some businesses that, Marc, maybe won't come back. In other words, that were permanently damaged by what's gone on. When you look back, do you regret that we didn't come to this sooner, that we couldn't have changed policies in a speedier fashion, kind of at the pace of some other countries?
Well, listen, it's no surprise to you that we wanted the restrictions lifted last April, May, to take advantage of our busy summer season. So we went through yet another summer where we had restrictions, and that obviously had an impact on tourism in the country. There wasn't a day that went by that we didn't get an email or a message from somebody in the industry where something went wrong and travelers decided not to come to Canada or they canceled their trips. So yes, we would have liked these restrictions to disappear much before they did.
We definitely know Canadians are the big bulk of tourist travel in Canada. We travel domestically a lot, and it would be great to drive up the international visitors because there's a lot of opportunity there. Did Canadians slow down their travel, or did you actually get more domestic action because of some of the friction at the border?
I'm glad you asked that question because we just not long ago got our latest sort of forecast for what to expect going forward. So we know based on existing data that by the end of this calendar year, we should be at about $80 billion in total tourism spending in Canada. But let me put that into context. First of all, that's 24% lower than we were at the end of 2019, that is before the pandemic. Domestic spending is expected to recover more quickly. So by the end of this calendar year, we think domestic spending will be at $69 billion. And that's only 16% below what it was before the pandemic. But your point about international travel is right on the mark because international travel will take longer to recover. Current projections have international travel, or the total spending from international travel, to achieve $11 billion by the end of this calendar year. But that's 53% below what it was before the pandemic. So we have still a long way to go to recover.
We've only got a few seconds here, but some medical members of the medical community said those masking rules weren't necessary in retrospect. Do you think there's any compensation due or more compensation due to those in the industry that were hurt by some of these rules?
Well, you may know that Minister Boissonnault, the Minister of Tourism, launched a consultation process to develop a new tourism growth strategy for Canada. We made a very comprehensive submission to this, and yes, we believe that significant investment needs to be made in tourism to help it not only get back to pre-pandemic levels, but to position it for quick growth from there on out.
Marc, good to have you with us. Appreciate your time.
Thank you. Have a great day.
Marc Seguin is Vice President of Policy and Government Affairs with the Tourism Industry Association of Canada. Canadian farmers had a pretty good season this year. Grain crops are expected to be robust. Well, that's good news, of course, in a world of food shortages and rising food inflation. But grain producers here are worried they won't be able to ship that grain to market because of less than adequate transport infrastructure. Wade Sobkowich is Executive Director of the Western Grain Elevator Association. Wade, great to have you with us.
Thanks for having me, Amanda.
So this sounds like a pretty terrible situation where we get a bumper crop, tons of market for it in the world, and yet an inability to ship it to market. What is the problem here?
Yeah, so we're concerned about our ability to get proper rail capacity and rail service this year. And in order to explain why we're concerned, I think it's important to take a look at what's going on globally, but also what happened last year within Canada. So globally, we have a strong demand for Canadian grains and oilseeds. And we have the war between Ukraine and Russia. We're coming out of 2 years of a pandemic, and we've had some serious supply chain issues in the recent past, and it's damaged our reputation. So this crop is very important for Canada to be able to reestablish itself as a reliable supplier of grains and oilseeds, and also to help farmers get a proper return, which was lacking last year due to the crop size. So that's sort of a brief word on the global perspective. And then last year, we had serious transportation issues for a variety of reasons, and we had a very small crop last year. So last year in Western Canada, the crop size was 49 million tons. This year, it's 75 million tons, and we really struggled last year. So we question our ability as a country and as a supply chain to be able to get product to market this year.
So you ship by rail, of course. The markets, I think your biggest markets are to the West, markets in Asia. What are the rail companies telling you about their ability, or presumably there's still a little bit of time, although it may be late now, Wade, but to lay on extra cars or whatever they need to do to make sure we have the capacity to get the product to market?
The railways put out grain plans every year. CN and CP put them out that identifies how many rail cars they're going to supply to the grain industry week in and week out. The problem is that they're not accountable to those numbers, so you almost have to take a look at them and understand the context and understand some of the other messaging. Within those grain plans this year, there was a lot of language about how the railways won't be able to meet those numbers, or if they don't meet those numbers, this is why. And strong signals from CN in particular saying that the grain industry should be moving more product east rather than through the West Coast. So that's a strong signal to us that we shouldn't expect what we require this year. Mm-hmm. Of course, the grain industry gets ships through the West because that's where we get a premium.
So just so that people who aren't farmers or not part of this world understand, if you can't ship the product, what happens to it? How long before it is no good to anybody?
We sell the product 6 months, 9 months ahead of time. So we book vessel freight. We have a contract with a customer in China or Japan or Indonesia or wherever they may be. And we organize our logistics to be able to get the product to them when they need it. There are penalties throughout the supply chain. There's a penalty to the exporter if they don't deliver within a time window. That we pay a penalty to the vessel owner if we don't load the vessel within the period of time that we organized and promised to do. And we pay a penalty. There are consequences to the farmer that we would pay for storage on farm or whatever other consequences there might be on the farmer side. So it really stands to add costs to the system, to the grain handling system, but even more importantly, it really stands to perpetuate the damage that's already occurred to Canada's relationship or a reputation, I should say, as a reliable supplier. And we're trying to recover that as much as we can this year. But frankly, our reputation is really poor with our customers right now.
Wade, it's a tough note to leave it on, but we got to leave it there. It's great to have you with us.
Thanks for having me, Amanda.
Wade Sobkowich is Executive Director of the Western Grain Elevator Association. Coming up, how to make a real difference in the prosperity gap for Canada's Indigenous peoples. But first, this. Fears that an asteroid might one day barrel into Earth were somewhat allayed this week after NASA undertook a far-out experiment at sending one off course. It was right out of a sci-fi movie, and with a blockbuster $325 million price tag to match. Did it work? Well, you might have to wait for the sequel. It could take weeks to know if the asteroid changed course. For now, all we know is a very expensive collision occurred. We're back after this.